As Bitcoin continues exploding sideways, these are the final moments for the baby bears and the baby bulls. Meanwhile, could everyone have missed this massive clue that Bitcoin has been giving us and the real reason we've been stuck around $40,000 for nearly 6 months? And with whale holdings at all-time highs, even while Bitcoin risks potentially crashing massively, you will not want to miss what this means right now. I'm dripping with excitement as some major clues have finally revealed themselves to us on these charts. And wow, this could not get any bigger. So get the new channel, make sure to hit the like, subscribe, turn on those ghost notifications so this is absolutely time-sensitive alerts. As well, if you're interested in any bonuses, deals, getting any kind of amazing bonuses or securing your crypto, staking your ADA to earn rewards with our pool, or even simulated trading, which I highly recommend on Femex here, where you don't have to risk anything and you can practice for what could potentially be a very big move. Bitcoin is obviously in a very nutty spot right now, and if it does take a big tumble, holding is not a great way to make money. Holding your money all the way to the downside is usually not the best way to make money in the short term. But as well, I have one Twitter and one Instagram, and the links, the real ones are in the links, the description below. Without any further ado, let's jump in. Big. So as Bitcoin is currently trading still around $40,000 US, pretty much touching right on $40,000 every single day for the past couple of weeks, just back and forth between 40K. Currently, we're a little bit below that. As the DXY potentially has run into a little bit of a roadblock. This is huge. We're going to be talking about that as well, and many more things. But specifically, let's start here. So Bitcoin whale holdings at 7-month highs, despite warnings of Bitcoin price crash to $20,000 US. The prices could drop 20% in the next few months, but that has not deterred the richest of investors from stacking here. Whale wallets considered 1,000 Bitcoin or more are considered whale wallets, and they have increased to its best levels since September of 2021 of the last 7 months. And interestingly as well, the number in the past few weeks grew despite Bitcoin's price decline from 43 to 38. So not that big of a drop anyway. But something key about this in terms of if we do get a crash, obviously Bitcoin, everything will crash if we would get a macroeconomic crash, obviously. But, there are people that believe that Bitcoin will recover much faster than U.S. equities because it's happened many times before. Bitcoin recovered faster than the U.S. equities every single time here compared to these other investments. Okay, and again, I personally think, if we do get a massive crash in the future, if we do get one more massive dip, if a lot of people see that potentially being the case where we're about to see something very big happen to the downside, if something would happen like that, it would be silly to think Bitcoin would just not crash also. It very likely would, obviously. However, what this analyst is saying, and what I think makes the most sense, is that Bitcoin would recover and bounce and, be the best investment post-crash. As I believe it's the best investment pre-crash anyway, I still think that, I just think it would be very good for Bitcoin holders comparative to all these other things you could be investing in. And as well, since everything is painted very bearishly here, the possibility of a very large macro bullish pennant obviously is also in play here. In TA, a pennant is a type of continuation pattern formed when there's a large movement in security known as a flagpole, followed by a consolidation with converging trend lines, the pennant, followed by a breakout movement in the same direction. And it's very key here. It's important to look at the volume. The period of consolidation should have lower volume, and the breakouts should occur on higher volume. In the image above, this is what a pennant looks like, okay? Similar to, say, this, where we have this macro run-up, like this. So we'll just pull it up again. Flagpole, pennant, breakout. Flagpole, pennant. And the one thing you might, obviously, as we talked about almost every time we pull up triangles, is fake outs right here. This is what I would consider a fake out, where we have a little bit of a move. We literally broke this all-time high by a few $1,000s when we hit 69,000. Nice. And then crash back down. But other than that, it's basically a perfect pennant. And this has been going on, this has been forming for a year and a half here. But other than that, yeah, very, very obviously looks as though it's ready to break down. It's trading at the very bottom of this pennant. However, one thing we also do note is that this entire pennant volume has been abysmal. Volume has been declining this entire pennant, which also gives more credence to the possibility here. Even still, I think it is very likely what we could see, if this even is a bull pennant breakout, we could see that fake out to the downside. So yes, I still absolutely believe we could see lower prices in play here, especially if the the macroeconomic factors in the global markets do not do well over the next few months, absolutely it's very more likely than it is not that Bitcoin also will make a move to the downside. However, what will come after that, I believe, is a very strong, very quick bounce to the upside that will catch a lot of people off guard. But again, this will take time to play out. This is not going to happen by next week. This is on the weekly chart, and this is a 1.5 year consolidation. So we're talking very macro here. We're not talking about something happening by tomorrow. This will take time to play out. But absolutely, the volume, we have not seen a breakout at all yet. It's been fake out after fake out and mainly just sideways for a very long time. And as well, even on the smaller chart, the entirety of 2022, so only the past 4 months, Bitcoin is still within potentially this shorter term bearish flag where we could see it break down, and that's where we could see those mid 30,000, even a little bit below levels, even a little bit below that, or lower levels below that. Here you have Bitcoin price slow to react as the US dollar stops at the 20-year highs. So really, if we take a look at this, the DXY, I think everyone's talking about this, so we're not going to spend too much time reiterating, but the DXY did set a new high, actually barely. If we zoom in really, really close, yeah, it actually moved up a little bit below those highs of January 2017 and significantly above the highs of March of 2020. However, right now it's a little bit below that. Right now, if we go to the peak of that, it's down almost 1% from those highs. But again, this is going to be very interesting over the next week because now, as of the last 24 hours, we have set a new high here on the DXY. But the big question is now, is this going to actually start breaking out and breach these highs? Because right now, obviously, even as the article states, this is resistance historically of the past 20 years. Is this going to get rejected here? Or are we going to start to see this move up, which I think would shock a lot of people? And I think that's when things would get very, very, very turbulent in the market. Say the DXY starts moving up very quickly here. Absolutely. I think it's very possible that Bitcoin and a lot of other assets could take a nice tumble. Short-lived, I believe, but that's where that would be the perfect storm for a nice little dumpy before we get any type of movement. And again, I personally absolutely would much rather see movement, volatile movement to the upside or downside, as opposed to this sideways trading, which, let's be realistic, it's been really sideways for a very long time, all of 2021 and all of 2022 so far. Okay, this was our first, we saw this macro breakout, and we were making videos talking about this, very exciting. This was a much more exciting time here. 10K all the way up to mid 60s, and we've just been trading sideways since. So it's been sideways on the weekly chart, it's been sideways on the daily chart, it's been sideways on every single chart for Bitcoin. And now we're at the point where the DXY has been rallying as Bitcoin slowed down towards the middle of 2021. And remember, because Bitcoin started breaking out as the DXY was plummeting. This is where Bitcoin really started to shine here. Bitcoin was about 3,000 here. And then as it reached the bottom here, Bitcoin was, tens of thousands of dollars as the DXY was very low. So that's just very important. And as well, this kind of looks like something I think is realistic, where it does require more of a little dump actually in the very, very short term. But then we could see a quick rebound followed by kind of a quick recovery where we could see much higher prices there. That's what I think makes a lot of sense, pushed out into 2023, even 2024. Just very big for Bitcoin. But again, this week is it's literally so huge because of the DXY, because of the fact that Bitcoin is again, so close to breaking out of this pennant that's been in the entire year of 2022, 4 full months now. But pretty much to sum it up, there's going to be a bust, and it's going to bust very big. So if you guys are new channel, please like, subscribe, turn on these ghost notifications, and this is absolute time-sensitive alerts as well. If you guys are interested in bonuses, deals, remember, if you're going to be holding, if you do think Bitcoin's going to be dumping, then feel free to short it or trade it, right? Trading altcoins, obviously, is the most lucrative way of accumulating more Bitcoin, even though it is risky. Again, I say it all the time. I personally think just being in crypto or even being invested in anything right now is pretty risky. This entire economy is risky. So there's really not many risk-off plays here. But as well, there's simulated trading here on Femex. It's very sick. It's very cool. Literally, you don't have to risk any money, and you can learn how to just do the basics of trading, which, after a couple days, I really don't see it being that difficult. It's pretty simple once you understand what a stop loss is, or how to enter a trade or a market or a limit order. As well, I have one Twitter and one Instagram, and the rest are fake accounts. My only real ones are in my description of this YouTube channel. Without any further ado, that's it for me.